Next week, the House of Representatives is expected to vote on a proposed $825 billion stimulus plan that will include billions for spending on infrastructure. Joining us with more on this is Rob Collins, Managing Director and Head of Infrastructure Banking for the Americas at Morgan Stanley. Rob, welcome.
Thank you. It's great to be here.
And we were talking in the break, you've been doing this, you've been in this industry now for about 10 years. So this must be a pretty exciting time for people who are investing in this, who are analyzing it, who are following it.
It really is exciting, Kathleen. It's particularly exciting because of the opportunity to create jobs. We've identified over $180 billion of private infrastructure equity that can significantly accelerate job creation in America.
Okay, you say there's already $180 billion committed to this, or just ready to go?
It's committed. It's actually tripled over the last 2 years. In 2006, there was about $60 billion of infrastructure private equity capital, made up of about 15 infrastructure funds. Today, Morgan Stanley has identified over 30 infrastructure funds that are targeting the United States for investment.
But you also have been quoted recently saying there's a scarcity of high-quality projects.
There's a supply-demand imbalance, and really what we've seen is that since the Chicago Skyway deal, which closed in January 2005 for $1.83 billion, there's only really been one other multi-billion-dollar toll road deal that's closed, and that's the Indiana toll road deal that Governor Mitch Daniels got approved by the legislature and ultimately closed in mid-2006. That deal for the state of Indiana ultimately created a fully funded transportation program over the next 10 years. And Indiana is the only state in the United States right now that has a fully funded transportation program because of it.
Well, I guess maybe people have been wondering for the longest time when the money would come. We knew we needed more infrastructure spending, especially since the bridge in Minnesota collapsed, right? That was very symbolic, or, you know, a big
tragedy. Exactly,
a tragedy, but it really focused attention, but nothing really seemed to happen. Now, you also point out in a recent report how there's $180 billion of equity capital could be leveraged to $450 billion. But then when you say there's a shortage of projects, is the government going to lead us in the right direction? Are you confident in that?
Well, I think the new information is that the Department of Transportation has identified for every $1 billion of infrastructure stimulus spent in the United States, 34,800 jobs, call it 35,000 jobs, are created. And so what that means is when we're able to take private infrastructure capital and really marry it with debt capital, either through the federal government or from outside sources, we can be generating 1.6 million jobs, new jobs, every year over the next 10 years. And that could really take a dent out of unemployment.
1.6 million this year alone?
Yes.
Wow. So what about it from the investment side? If this is something I want to make money on, what am I looking at? What should I be doing?
Well, I think on the investment side, the limited partners in these infrastructure funds are typically insurance companies, pension funds, many labor and union pension funds, such as the Carpenters Union. They're able actually to participate in the growth of these infrastructure assets. We also see nonprofit foundations and school endowments participating in infrastructure funds. And so the opportunity is for the United States to really improve the quality of our infrastructure nationwide and allow a fair return in the 10 to 15% range for many of these unions and pension funds.
But if you've been following infrastructure, you've probably also been following, the fear is a lot of this money is going to go in people's pockets or be wasted, or, you know, that kind of project. You confident that won't happen?
Well, I think that there's a market for these assets, and what's incredible is when I was holding the envelopes on the Chicago Skyway deal, which was really the benchmark catalyst for a lot of these funds to be created, and the first bid we opened on the same exact contract was $500 million. The last envelope we opened was $1.8 billion. So from that perspective, we see governments really getting great value as long as the deal is well structured.
Well, that's what we like to hear. Rob Collins, come back. This story is only beginning, we can tell. Thanks so much for joining us today.